Today, we're going to talk about Fintech SEO best practices. Siege is lucky enough to have worked with a ton of great finance companies from seed stage to IPO. And through that process, we've learned the very competitive nature of this industry and how to get results within it, whether it's in 6 months or sometimes 4 years to see those full results. So in this video, we're going to talk through that end-to-end practice, share the playbooks that we leverage to see results, and bring you to the finish line of ranking for those very competitive terms. As one of the first things that stands out about these markets is generally technical SEO is not as big of a consideration. It's not something to ignore. It's just not quite as important as more large websites that have millions of pages or close to 1 million pages that very often fintech startups do not. These tend to be more content websites, which means they at max have a couple thousand pages. They are very lucrative, highly competitive terms that they're trying to rank for around like credit cards and insurance, etc. But rarely are they up against Amazon and Walmart with these very complex technical infrastructure issues, which means that really if you're hiring an SEO internally, it would generally suggest thinking about someone who's more adept at the content SEO side of things, because that's gonna be the majority of your problem. So a good kind of like team stack in fintech SEO is very often a great SEO manager. And then under them, very often the best hire for search are great content marketers who can do writing and promotion, and also actually a UX designer. UX is such a huge component of these pages on a per page basis, and you're gonna try to really nail that. And it's often the competitive framework you're competing on. So to be world-class at that is super important and actually will impact that search side of things that you're trying to make a difference on. A huge part of SEO in fintech is link acquisition. So links matter everywhere, but in fintech specifically, these markets pretty generally always make it very difficult to generate links because you're connecting commerciality, conversions, money. And when you do that, most people don't want to link to you. It doesn't feel altruistic. So that nature means links carry more weight because they don't occur as often. So this often means manual link building does make sense. We generally suggest checking out our post on how much a link is worth in your market. Look specifically at that content lens for the terms you're trying to rank for. And you can do this math. Very often in finance, the numbers are going to be in the 10,000s. And when you see that number, often like 10 to 1 in terms of the difference between it will cost you to generate high quality links, that's often means that manual link acquisition makes sense. If you see the number is a lot lower, sometimes 4 to 1, 3 to 1, you most of the time want to generate that through brand activity or ranking for things on average. So finance means you very often have to do that manual outreach and PR to see the outcomes you want. As part of this, one of the main ways you can actually generate links in these spaces and actually a barrier to entry, especially for the most competitive terms, like car insurance, life insurance, home insurance, credit cards, etc., is actually TV advertising and funding rounds and startup investing, etc. So all of these kind of naturally have cycles of link outcomes. Additionally, they're just a secondary way of getting exposure that drives SEO results. Because again, people don't want to link to you, so naturally having this activity in other areas will generate enough brand awareness that you can generate clicks, awareness, and outcomes that are so desperately needed in these spaces. So an example of this, say you're IPOing as a startup, as you ladder up to that route, you're going to be generating links at each stage with the press that occurs from that work. And because links are so rarely occurring in these spaces, that 100 links you get in total going from seed stage to IPO, and that might be very passive in total number that are all very high authority links, could potentially power around 25% of your link acquisition strategy that someone who didn't take that route would be so less likely to be able to pull off. So you can see how this is so important. And in addition, there's even like value in IPOing simply for this. So an example I like to reference is NerdWallet, who recently IPO'd. And if you look at their IPO and their link graph specifically, you can see a very notable uptick around the similar time that they IPO'd. Now people are going to be talking about their stock price, especially if it does better over time, and potentially if it does worse as well, because that's a news story to talk about, where logically they're going to get linked to. And that will benefit their rankings potentially over time because it's so hard to generate links in this market and is a natural benefit for them. So I often will say to people, the barrier to entry to ranking for some of these industries is often to do those other things first and then think about search maybe Series A plus to see that value and make sure you have product market fit, etc. But if you're trying to rank for these 2-word terms, good luck doing that if you're not also generating brand awareness through these other channels, because it's very, very hard to just do that purely altruistically unless you're actually spending money to win on search. And that might seem counterintuitive, but it is kind of a needed element to have enough clicks and awareness to see the outcomes you want on that side as well. So when you are doing link building, an extra notable piece about this is you don't actually want to do outreach to personal finance bloggers. Similar wavelength, all of these personal finance bloggers will ask for money if you do outreach to them, no matter how high quality your content is. So very, very often you have to kind of get more clever or know the outreach markets that exist online where you can create finance and then associate it with a tangential market that still makes sense. So some routes you can do this very often are high-end news. That money kind of angle very often does connect to subjects that press want to cover. So you can do surveys, data studies, etc. You can also do local news. You can do special interest groups. Very often resource pages will have connections to money in some way where you can talk about a market plus money and it'll make sense and be relevant as long as it's relevant to your business to get high quality links that drive outcomes for you as well. And then for sure, if you can do passive link acquisition through topics that make sense for you, we very often recommend leaning into this for every appropriate term that makes sense in that business. They're not often prolific in fintech specifically, but because the margins are so tight from a link standpoint and so hard to generate them, you want to lean into all of these that exist. Very often, what is topics are one route to go there. It's a common framework where people are thinking about things around their money and will search what is blank before making a decision around money. A good percentage of the time, people will take that definition and then link to it as citation of that. So you, as a fintech SEO, could actually try to rank for these things. Our general best practice is to use subheaders that have low time to value. So if you have a term like, what is a debt snowball? And you search that, the subheader should immediately address that query right under it to be truly best practice for search and for users and get those rankings. And also you find people will quickly grab that definition. As an extra special tip here, I would suggest occasionally Googling your own definitions. You'll find people that actually leveraged it but did not cite you. So reach out to those people and get some additional links and benefit that are so difficult to get in the space, and you'll get additional momentum from that tactic. Calculators are also a big part of this process. In finance specifically, doing that math is a very common framework to see results. As a general best practice here, you want hyper thin time to value or hyper low or just really low time to value on these calculators, effectively meaning if I'm searching mortgage calculator, I want that answer so fast, I don't want to have to put in a ton of inputs. You can very often do this by pre-selecting things that are common for users more often, maybe pre-selecting their location. All those things that kind of lower that time to being able to fill that out will enable better rankings and also passive links as well. So this is where that UX designer that you might have hired really comes in, because they're thoughtful about this best practice and you can iterate on that over time to see value. Finally, this is a your money or your life vertical. So it's very important to think that way because your money is on the line here and people want to truly trust you. So you can't fake this. Low quality personal finance affiliate sites are really not a thing. You have to be a credible voice. A few ways you can communicate that, definitely a high quality about page, but on content specifically, having people that editorially review that are finance experts or finance editors and kind of noting that for users above the fold, again, giving them that low time to credibility will enable you to gain that trust on load and get more value. And additionally, that high quality UX design communicates that as well. The funding rounds you've gotten, all those things can kind of speak to that full story. It's a never ending journey to establish fintech quality and trust from users, but it's an important part of the process to actually see the rankings over time. And something as we overall wrap this up, fintech and these verticals are amongst the most competitive on the web. And especially if you're trying to rank for those 2-word terms I just spoke of, they're the kind of spaces that you don't really say you're going to rank in 6 months for. This is often spaces that take 2 to 3 years if you're mind-blowingly amazing in your vertical and doing something different. Some might take 4 to 5 years to see results from that total equity that's built up over time. And that's no simple endeavor. And this is why ranking for long tail terms are valuable as you ladder up to that effort. But it's just notable, don't expect to rank for a 2-word term 6 months after launching your startup or even Series B of your startup to really be realistic about what's feasible there. So hopefully this kind of wrapped it up. Fintech SEO is definitely a competitive space. You want to eke out those razor thin margins of UX best practice, be more efficient from a link acquisition standpoint. Do manual outreach when it makes sense because the math is clearly saying it does. And hopefully this all adds up to an efficient strategy for you. So I appreciate you watching this video. Please give us a thumbs up if you like it. Subscribe, jam the notification bell, and let us know what you thought in the comments. Appreciate you watching. Thanks. I said that twice. Gratitude.